All right. Good everyone, and welcome to another review. Um, this is a weekend in review for Friday, and this would just be talking about two things: the market maker sell model and my execution for the week ending Friday. So usually I don't like trading on Fridays. Fridays are somehow annoying. It tends to do the opposite, or sometimes most of the time it tends to retrace deeply. For Friday, it tends to retrace deeply into a discount prior to the Tuesday. And Friday retraces deeply a lot, expands down, and I don't really like it. So, and that's the reason why I really don't trade Fridays. But for today, Friday, I took just one execution, and that was it. It was based off on the market maker sell model, and on the 15 and 5 minute charts were based upon the market maker sell model, and also this being my daily chart, and this was Wednesday, a Thursday. So Thursday we had a strong displacement, a strong move above this inversion favored gap from this low to this high. We had a strong move above it, and prior to the fact that I was looking at this high Wednesday, and this is Thursday. Thursday closing prices. So I'm also expecting Friday to close here about my retrace a little bit and then close here, but leave a little bit of space. So I would like to see Friday take out this fair value gap. So for next week, I might want to see drop down a little bit and then we'll resume going higher. That's just the plan, and it's just probabilities. The market is not 100% guarantee, and neither is result. So everything should be practiced and tested on a paper trading account or a demo. So we have this low, this high, fair value gap. When it leaves it, it becomes an inversion fair value gap. So this was where my eye was drawing that today, because this is Tuesday, this is Wednesday. We didn't really trade above Tuesday's high. Okay, we didn't trade above that, and told me that it occurred to me that we should be looking forward to going lower for like a deep retracement for Friday. So that was my theory, but it's not 100% guaranteed. But I took a sell today on the euro dollar because I was looking at Thursday. Thursday didn't close above this Tuesday price, this high. Although we wicked a little bit above the closing price, but we didn't really close above the high. And Friday we opened, yeah, we traded a little bit, and then we started going lower. So I will be turning on all the lipsticks on the charts right about now. So these are the lipsticks on the chart. So this was the high I was looking for prior to this high. This red line extended backwards. So because we didn't trade above Tuesday's high, I was looking at, all right, we might have some retracements on the on Friday, and I had this level right about here that we should be reaching from this level to this level, an inversion favorable gap for me. So I'm just going to go into to my execution for today, free Friday. Let's go sell. So dropping down to the 1 hour chart, and Friday usually retraces a little bit, and dropping down to 1 hour chart. So this theory will be based upon the market maker sell model and just a little bit more. So right about now we have these high that we couldn't trade above, so we traded down. And a 15-minute chart, I should do the explanation probably about more. So now I actually had this 5 minute favorable gap, bearish or block, rejection block, last half defense. If it breaks, it's going high. So it closed above this price range and went into the 1 minute favorable gap, which I'll be going to next. So if it closes above here and came into the 1 minute favorable gap, that's a key indication from that. Yes, we might be seeing higher prices. So the theory was that we might be looking for higher prices soon, but we'll have to drop lower. So I'm briefly going to explain this whole analysis. First of all, I had this consolidation. Okay, I actually marked it out in this consolidation. I had a consolidation, and price broke down. I wasn't really interested in that. I was looking at this fair value gap. Price broke down, respected it, and then traded higher. Okay, so zooming in further, it traded high into this 15 minutes fair value gap from this low to this price, this high. I don't like considering this low because this high. Rejected a little bit and then expanded, came into the 5-minute inversion fair value gap, right? And then we pushed higher into the 1-minute fair value gap, a bearish block, and then started driving lower. And this whole price action started happening before the market actually opened. So what market were actually displaying for me was based off on the fact that when we traded higher and then we started trading lower, we came into same fair value gap, and then it was about 145, 2, 230, 245, and 3. So while I was watching this whole displacement down and then started trading, trickling back up, there was not really like a strong move. Now, from experience, I understand that, all right, this somewhat is like a first stage market maker sell model, in the sense that I have this 5-minute fair value gap right about here, which has not been used. All right. The reason why I said it has not been used efficiently well was because if price had come up and then displaced further, then I'll be looking for the 1-minute fair value gap. But price came up, consolidated a little bit on the 15-minute fair value gap, and then we pushed higher. So this fair value gap hasn't really served its purpose in the sense that it was supposed to send price lower, but instead it went higher and then it didn't send price lower. Instead, the 1-minute fair value gap did it and sent price lower. So 15-minute 5 fair value gap had to do the job. So when price was trickling back up, I was watching it. I didn't really take this buy because it wasn't like really much of a plan for me. And it was just trickling up, trade down, went up. We had this fair value gap. I would not consider this. So whenever I see something like this, I understand that this is liquidity. We had this equal lows, this liquidity, this is liquidity, this is liquidity. And my main focus on the drawn liquidity was that I really wanted to see price reach here. So my main focus was that price has to reach for this. That was the reason why I was looking to sell. And also we didn't close above Tuesday price. Right? We didn't close above Tuesday price, and it tells me that okay, yes, fine, we have to go lower. And one thing I do before trading, I don't just dive into the market. I'll start doing analysis. I first of all find where it's going to reach for. All right, if I can identify where it's going to reach for, then that's when I start doing my analysis. And I love sticking with the order flow. But in Friday, when it comes to Friday, we have two probabilities on Friday. Either for Friday, we're going to have an expansion or a retracement. It happens on Friday because who knows what the banks are thinking. They're all fucked up in the head somewhere in a way. So going further, being the 15-minute chart, let's dive down. This whole price action, if you move, I was actually looking for the Thursday midnight. All right, so this is 12:15, 11. Yeah, so I actually marked this on the trading view. I don't know why it went out. Probably I deleted it. So I marked this 12 midnight candle, and I was just watching our price was trickling back up, and then immediately got into this 15 minutes fair value gap. I actually just placed myself, my stop above this level. And the reason I was so confident about it was because I understood, or I know, or my probability, or the probability of it reaching for this is quite high. So that was the reason I was confident about it. So when price came here and then sold down, I was like, good. I was in the sell. I was profitable. I had my take profit here. Hit my take profit beautifully, and I went out of the trade. And then again, it started trickling back up, trickling back up. I was like, okay, well, so what's this nigga going to do? We have to reach for this price level, but why is it trading back up again? And then I understand that after looking at this, after marking this first stage market maker sell model, this is the second stage market maker sell model. So sometimes Mark Jefferson, the ICT or Momento, he always says that he favors the second stage market maker sell model or the second stage expansion. Most of why he favors that. So I really don't know why, but sometimes I think if you can actually get to see the first stage market maker sell model clear enough, then you can identify the second stage very well. So I think that's the reason why it favors the second stage, because the first stage might just be, sometimes it might be some crazy stuff going on, but when the first stage delivers, then you're more confident that all right, the second stage is also going to deliver. And also, if you drop down to a 1 hour chart, the reason why the second stage actually ended here was because, first of all, I was looking at this low to this high, this fair value gap. It needed to trade back. I took another sell from here after closing on my TP from here. I took another sell from here, and this is just an accumulation stage. We have an accumulation, so I'm looking for the price dropping, draw into this level. But this is what I'm actually. This was the reason why I took the sell from here. If I drop down to a 1 hour chart, right? If I drop into a 1 hour chart, you clearly get to see that we had an inversion fair value gap. All right, so this was an inversion fair value gap to me, that being this low to this this high to this low was the fair value gap, and that should serve as a blueprint for the second stage market maker sell model. That should serve as a blueprint, and that was the reason why I intended to sell, because from this low to the side, from this low, this whole scenario is being balanced, and I also see this as accumulation. For me, accumulation again, I might be wrong. That's why I say most of the time that my analysis are not 100% guaranteed. It's all probabilities, and you just have to stick with all the flow of the market. And on Friday we had a deep retracement, so there was the reason based upon the backdrop of the inversion fair value gap. Now, why don't I favor this low to this high, this fair value gap? It's because we had this fair value gap right about here. When it leaves it and come back, this low prior to this high becomes a balanced price range. All right. So leaving this entire price range, and we have this inversion fair value gap here, the algorithm is going to see this from this low to this high as a balanced price range, and trick buyers go up just to sink lower. That's how it works. Sometimes you might not be able to identify it all the time. So let's drop down to 15-minute charts again, and this is just going to be a short video. And so my sell was from here, and the second one was from here, and I'm watching this closely. So now let's draw our attention to what, although our order flow is being bullish, the trend is being bullish, the market structure is being bullish. Drop down to 5-minute chart. Okay, so now this is the 15-minute inversion fair value. Can you see that it's stopped exactly on the inversion fair value gap? No trick, not your support and resistance, and immediately flushed them. There was a news event. I didn't know there was a news event. I just took out my trade based on my analysis, and then boom, switch trade, beautifully executed. And who knows? It doesn't happen every day. So this was a 15-minute fair value gap we traded into. The reason was because this fair value gap didn't really serve its purpose. It was supposed to send price low, but it consolidated in the fair value gap and then delivered. And then the 1-minute fair value gap, which we'll be dropping to soon. And then the 15-minute fair value gap had to serve its purpose, and price traded up. Traders who think this is going for a buy quickly, boom, drops down lower, take them out. Liquidity is grabbed. The banks are going to sell that. Then dropping down to a 1-minute chart. Okay, so this is the 1-minute fair value gap which I drew your attention to. So this, let's go in for that. I personally do recommend you do your analysis from the monthly down to the weekly, down to the daily, down to the 4-hour, 1 hour, 30 minutes. Keep going down, just keep going down. So we had this fair value gap, and that was what I was looking for. Why wasn't I looking for this one? Because we already traded into that. So we had this low, high, low, traded into it, delivered price down. We haven't really traded into the gap, so that was why I took out the sell trade, and you can see it was a beautiful trade, and it's not really like that much difficult if you practice on a steady. So this is what I'm actually looking at for next week. I don't really like predicting what the market is going to do for the next upcoming week, but this is what I'm looking for. Now the market has to shift structure. Okay, it has to shift structure. So what is it about shift structure? It's going to shift structure, then come back, create another low, and then start going high. because retail traders will see this as a trend line. Okay, the market is going to come back into their trend line, deliver price into the trend line, this, and then sink lower, attacking this low. So that's why I said Monday we might still reach lower and then start going higher. So for the time being, while price is trickling higher, I'm currently in the buy and taking out my position here about there. So when it trades above this high, this fair value gap, that's a shift in market structure for me. Tells me that it's likely going to see higher prices, but it's going to go lower again. It has to go lower again, because one thing about shifting market structure is that where everybody thinks market has shifted structure and is going to continue doing what it's doing, that's not where that's not where market makers see their shifting structure. They like to see the market shift structure, and then after shifting structure, they want to take it below where it shifts structure and then continue trading it high. So Monday, this would be my draw on liquidity. This would be my high. This would be my focus. Buy sell liquidity, and after we go up, which have a shift to market structure. So then we might send lower, consolidate a little bit. Friday is fucked up, and we might just start doing the necessary. So this is what my plan. So after this level, we have this level. We have probably this level, and then we have this level. So this is my plan. I like to drop my plan like this, so it helps me. All ICT based theory, and second stage mathematical cell model, first stage mathematical cell model is not support and resistance, it's not supply and demand, it's not pattern, it's not your bats pattern, it's not your flamingo pattern, it's not your 50 shades of gray pattern, it's not your harmonic, it is algorithmic, and the algorithm know what it's doing, and the banks study the algorithm, and you have to study the algorithm to stop eating grass. So this week has been good. I was profitable this week, and next week, let's see what the next week holds for us. On the way to profitability. Have a nice week.